You don't have a strategy problem. Pause. You have a behavior problem. And that's harder to fix because it doesn't show up on your chart. You've back-tested. You've watched the videos. You've copied the setups. And yet your account keeps bleeding, not randomly, not unfairly, but consistently. So the question isn't, why is trading hard? The question is, why do you keep losing, even when you know what to do? Segment 1. The illusion of having a strategy. You think having a strategy is enough. Entry, stop loss, take profit. Simple. But real trading doesn't happen on clean charts. It happens here. Cut 2. Live price flickering violently, where your heart rate increases, where candles feel personal, where your brain starts negotiating with your rules. That's where your strategy breaks. Not because it's wrong, but because you don't execute it the same way twice. Segment 2. How it actually shows up, real trading. We're going to strip this down, no theory, just what actually happens. 1. Fear. You enter a trade. Everything looks valid, but then price pulls back slightly. Not even your stop, just uncomfortable, and suddenly you close early, small loss, or tiny profit. Cut. Price hits your original target after exit. You were right, but you didn't stay. Why it happens? Your brain isn't managing risk. It's avoiding emotional discomfort. 2. Greed. You hit your target, but you don't close. Because this one feels strong, you want more. You deserve more. Cut. Reversal wipes profit. Now you're back to break even, or worse. 3. Overconfidence. You win 3 trades, maybe 4. Suddenly, you're not following your strategy anymore. You're predicting. You increase lot size. You take trades that are almost valid. Because now, you trust your feeling more than your system. That's when the market resets you. 4. Impatience. Nothing is happening, no clean entries, but you're sitting there, watching, waiting, and eventually you force a trade. Not because it's valid, but because doing nothing feels like failure. 5. Revenge trading. You take a loss, a normal one, within your plan. But emotionally, it doesn't feel normal. It feels wrong. So you jump back in, immediately. Bigger size, no confirmation. Now it's not trading, it's retaliation. Segment 3. Why this destroys accounts. Here's the part most traders don't understand. You don't lose because of one big mistake. You lose because of small repeated deviations. Let's break it down. Inconsistency kills edge. A strategy only works if executed consistently. If you close early sometimes, let losses run sometimes, skip valid trades sometimes, then you don't have a strategy. You have random behavior wrapped in structure. Risk becomes uncontrolled. Fear reduces your winners. Greed increases your losses. Revenge multiplies your exposure. Over time, your risk profile becomes chaotic. And chaotic risk always ends in drawdown. You break statistical probability. Your edge lives in numbers. Over 50 trades, 100 trades. But when you interfere, you distort outcomes. You turn a profitable system into a losing one. Segment 4. The hard truth. Pattern interrupt. You are not losing because the market is against you. You are losing because you don't trust your own rules. And deeper than that, you don't trust uncertainty. So you try to control it by interfering, and every time you interfere, you pay for it. Segment 5. How disciplined traders handle this. Now let's separate amateurs from professionals, not by strategy, but by behavior. 1. They accept discomfort. Disciplined traders feel fear. They feel doubt. They feel hesitation, but they don't act on it. They let the trade play out because they understand discomfort is not a signal. It's a byproduct. 2. They define risk before entering. They already accept the loss, not intellectually, but emotionally. So when price moves, they don't react because nothing unexpected is happening. 3. They think in series, not individual trades. Amateurs obsess over one trade. Professionals think in batches. 10 trades, 20 trades, 50 trades. So one loss doesn't trigger emotion. It's just part of the sequence. 4. They remove decision-making during the trade. Once in, no adjustments, no second guessing, no moving stops emotionally, because they know. The more you think mid-trade, the more you interfere. 5. They protect mental capital, not just money, mental energy. After a loss, they pause, reset. They don't rush back in. Because they know, a damaged mindset leads to expensive decisions. Segment 6, story, retention boost. Single trader, late night, multiple losses. There's a trader who had a profitable strategy, back-tested, proven, clean, but live trading, he kept losing. Not massively, just slowly, consistently. So he tracked everything, not just entries, but behavior. And what he found was simple. He closed winners early 70% of the time. He increased size after losses. He skipped valid setups after drawdowns. The strategy wasn't broken. He was. Once he fixed execution, same strategy, same rules. Everything changed. Segment 7, the real problem. You don't lack knowledge. You lack behavioral consistency. And that's uncomfortable to admit, because it means the solution isn't a new indicator, it's discipline. And discipline is repetitive, boring, unrewarding in the short term, but unavoidable. Final segment, mindset shift, steady execution. Stop trying to win trades. Start trying to execute correctly, because in trading, winning is not your job. Execution is. Your job is simple. Follow your rules exactly. Even when it feels wrong, even when it's uncomfortable, even when you think you know better. Because the moment you override your system, you stop being a trader and become a gambler. Final line, slow, firm. You don't need a better strategy. You need to become the kind of person who can follow one.